One last thing. Inflation. Uh, are you concerned about inflation, and how can we offset that?
Yes, I think it's the single biggest, what I would call black swan risk to markets and the economy. We've had this period of time where we've gotten complacent about inflation because there has been none, and we've had a lot of deflationary events. Technology has been inherently deflationary over this sort of period as well. And but I think we may be at the fulcrum point for that to change. And the catalyst, at least the initial kind of match that lights the fire, is we have several trillion of Trump stimulus. You have the Biden stimulus. You have a big infrastructure plan coming. And then you have the stimulus of a very successful vaccine program where people are emerging into this summer having not spent a lot of money in the last 15 months. So you have these huge demand drivers fueled by a lot of fiscal support to the economy. The fact that a meaningful percentage of our country did very well. The people who did not lose their jobs in the last year actually in many cases did quite well during the period. Technology companies, Wall Street investors. It has been a period of exacerbating sort of income inequality, and people who were going through a more difficult time, the government stepped in and supported them during the period. And I think you've had this very, very accommodative Federal Reserve policy of kind of a zero interest rate policy that is expected to continue, and they've stated it will continue. It used to be they waited for the whites of their eyes, so to speak, in terms of inflation. They see it coming and they would take a preemptive step. Now they said, look, we want the troops to be kind of climbing over us off in the distance before we think about raising rates. And I think the impact of that is we may see, I think we're already experiencing large spikes in inflation. I mean, look at lumber prices, copper prices, single family home prices, cryptocurrency, the stock market, and then just food inflation, restaurant prices. I just think we're going to enter this what is not likely to be a temporary inflationary period. I don't think wages are going to go up as they have and not start to go back down again. I think that you'll see a floor for wages approaching. So I think it's good for the country that wages are going up, because a lot of people have not benefited by the success of capitalism over this period. But they'll need more wages because the basic goods and services are going to go up meaningfully in price. I do think it's important that the Federal Reserve act more quickly instead of waiting for inflation. So I do think it's one of the risks that investors should be looking out for.